Recently, billionaire Elon Musk made a shocking prediction. In 2025, cash will become a risky asset if you don't know how to protect it. Have you ever wondered why one of the richest people in the world warned like that? Inflation, low interest rates, and currency devaluation are silently eroding our assets. But don't worry, Elon Musk not only warns but also suggests assets that can help you overcome this crisis. Let's explore with us 3 types of golden assets that Elon Musk believes you should own in 2025. Don't forget to like, subscribe to the channel, and ring the bell so you don't miss any important predictions from big names like Elon Musk. Let's get started. Inflation is not just an economic concept, but also a real problem that threatens the value of each individual's assets. When the price of goods increases, the purchasing power of money decreases. In the US, the Federal Reserve, Fed, has maintained high interest rates in 2024 to control inflation. However, this has slowed economic growth, putting pressure on the labor and financial markets. As interest rates continue to fluctuate at high levels, the US economy is facing the risk of recession. This situation can spread, affecting other economies, making inflation in these countries even worse. Currency depreciation is not only a problem for developing economies but also a potential risk even for large economies like the US. The cause comes from the massive injection of money during the COVID-19 pandemic to rescue the economy and support people. When the cash flow exceeds actual demand, the value of the currency will decrease. In particular, the USD has been under great pressure due to huge stimulus packages and rising budget deficits. At the same time, U.S. monetary policy also affects global capital flows. When the Fed raises interest rates, investment capital tends to withdraw from emerging markets, reducing the supply of foreign currency, putting pressure on the domestic currency. In the context of cash losing value, shifting from savings to investing in real assets is really an indispensable strategy. Assets such as small real estate, corporate bonds, or creative investment models not only help preserve asset value but can also significantly increase profits. 1. Small real estate investment. Opportunities from modest amounts of money. Small real estate is an attractive investment trend for those with modest capital. In the US, the fix and flip model, buying old houses, renovating and reselling, has become a popular choice thanks to quick and clear profits. For example, in the state of Texas, an old house worth $150 after being repaired at a cost of $50 can be resold for $250, bringing in a profit of $50 in just 6 months. The advantage of small real estate is that the investment threshold is lower than that of large projects. With just a few $100,000 USD, investors can participate in the market, focusing on suburban areas with soft land prices and high housing demand. In the US, small houses in suburban areas such as Atlanta or Charlotte often attract young families thanks to their affordable prices and high potential for appreciation. In addition, the short capital turnover time, usually only 3 to 6 months, helps investors quickly recover capital for reinvestment. It is important to understand the market, choose areas with high demand and calculate reasonable renovation costs. For example, in California, a house near a school or hospital will likely resell faster and at a higher price than a house in a remote area. Small real estate is not only an effective investment channel but also helps investors learn how to manage finances and the market systematically. Success in small real estate is not only about buying cheap and selling expensive but also depends on optimal strategy. First, choosing the right location is the key factor. In the US, areas like Austin, Texas, or Denver, Colorado, are considered hotspots because of the rapid urban development and increasing housing demand. A small house near major roads, schools or shopping centers will be easier to sell and have high potential for price appreciation. Calculating reasonable renovation costs is the next step. Many investors make the mistake of spending too much on renovations, causing the total cost to exceed the market price. For example, in New York, the cost of repairing a house should not exceed 25 to 30% of the original purchase price to ensure profit. In addition, understanding the needs of target customers is also very important. Young families often prioritize houses with cozy living spaces, while rental investors want simple, easy-to-maintain designs. Finally, refer to market trends and reports. According to Zillow, small properties in suburban areas like Phoenix, Arizona, have an average price increase of 8 to 10% per year, highlighting the potential of this type of property. With the right strategy, small properties can bring in superior returns compared to traditional investment channels. 2. Rent and lease model. The secret to short-term growth. One of the smart and low-capital investment strategies in the U.S. is the rent and lease model. Investors rent properties for a long term, then renovate and rent them out for a short term through platforms like Airbnb. For example, in Florida, a popular tourist destination, an apartment rented for $2 per month can be renovated and rented out for $150 minus $200 night. If the occupancy rate reaches 20 to 25 nights per month, the profit can be up to $3.000 to $4.000 USD, far exceeding the initial rental cost. This model is especially suitable in big cities or tourist destinations such as New York, Los Angeles, or Miami, where there is a stable number of tourists all year round. To be successful, it is necessary to pay attention to the renovation and management costs. An apartment equipped with comfortable, clean furniture and a unique design style will attract more customers. In addition, renting vacant land and developing business projects is also an option worth considering. For example, in the suburbs like Nashville, Tennessee, the rental cost of vacant land is relatively low, only about $1.500 to $2.000 United States dollars per month. Investors can use this space to build a coffee shop, open a co-working space, or organize outdoor events. Revenue from these models can reach $5.000-8 United States dollars per month, bringing stable and long-term profits. The rental and sublease model not only helps reduce risks compared to buying real estate directly but also brings a significant source of passive income. However, to be successful, investors need to understand local laws and regulations on short-term rentals to avoid unnecessary risks. 3. Invest in vacant land and develop business. Investing in vacant land is not only a smart choice in using small capital but also opens up diverse business opportunities. In the U.S., suburban areas such as the suburbs of Austin, Texas, or the suburbs of Nashville, Tennessee, are becoming hot spots for vacant land investors. Instead of buying land to wait for prices to increase, many people rent or buy vacant land and develop business models such as unique cafes, co-working spaces, or small entertainment areas. For example, a startup group in Austin rented a vacant land for $1.500 per month and built vintage-style container cafes. With an installation cost of about $30, they attracted a large number of young customers thanks to the creative space. As a result, monthly revenue reached about $15.000 to $20.000 USD, generating significant profits after only 6 months. In addition, renting land to develop growing areas and provide clean agricultural products is also a potential option. In the state of California, renting agricultural land to grow clean vegetables, supplying local supermarkets or high-end restaurants is becoming a trend. This is not only an effective way to use land but also takes advantage of the increasing demand for clean food in urban areas. 5. Rent and sublease model. The rent and sublease model is becoming an attractive investment trend in the U.S., especially in developed tourist areas such as Miami, Florida, or New York. With platforms like Airbnb, investors do not need to own real estate but can still earn high profits from managing and renovating rental spaces. For example, in Miami, an investor rents an apartment for $2 per month, then lightly renovates it and lists it on Airbnb for $150 per night. With an average occupancy of 20 days per month, the revenue is $3, generating a net profit of about $1 per month. In addition, renting large houses and dividing the space into rental rooms is also popular in cities like Los Angeles. A whole house that rents for $4 per month can be divided into 4 to 5 smaller spaces, each renting for $1.200, bringing in significant profits for the investor. This model requires good management skills, from property maintenance to handling legal issues related to short-term rental regulations. However, when implemented effectively, this is a strategy that can quickly increase income. 6. Corporate bonds. Corporate bonds in the U.S. are considered a stable investment channel with lower risks than real estate. In the context of economic instability, interest rates from corporate bonds are often higher than government bonds, while providing annual fixed income. For example, large companies such as Apple, Microsoft, or Amazon often issue corporate bonds to raise capital. Apple's 2023 bonds have an interest rate of about 3.85% higher than the average savings interest rate at U.S. banks, about 2 to 3%. For individual investors, buying bonds from large companies is not only safe but also brings stable profits. In addition, corporate bonds from renewable energy companies such as Tesla or NextEra Energy are also potential options. As the clean energy market in the U.S. continues to grow, Investing in bonds from these companies not only brings profits but also contributes to supporting sustainable development goals. However, investors need to pay attention to assessing the creditworthiness of the bond-issuing businesses. Organizations such as Moody's and Standard & Poor's provide credit rating information, helping investors determine the level of risk. This is a necessary step to ensure that bond investments bring optimal benefits. In 2025, protecting assets and maximizing the value of money requires smart strategy and acumen. Investing in vacant land, rent-to-own models, or corporate bonds are potential directions to help you overcome the challenge of inflation and increase assets. What do you think about the above suggestions from Elon Musk? Please share your opinion or suggest other investment strategies in the comment section. Don't forget to like, subscribe to the channel, and ring the bell to update more useful content. Thank you for watching.